Hello and welcome back. Hope you're good, doing well. So we are having dollar yen setup is just simply farming over there. We are looking for this to drop, break down, and give us a sharp aggressive breakdown and continue to keep dragging lower. So, but before we're going to look at that, if anyone wants to join us, just simply visit wave-dasher.com and check the membership levels, or fill that form and send that to me for further informations. Okay, so we are having, dollar is simply keep, pushing higher within that ascending wedge. We can see clearly over there on this 4-hour time frame that the trend is creeping higher slowly on this chart. All right, so we got some sell off there, and then again trend maintained. All right, so correction came, again went higher, correction came, again went higher, correction came, again some sell-off came over there and went higher. So the drop is slowing down simply, okay, and price is just simply running within that ascending wedge, which is giving us a signal that we may see a sharp sell-off over there from that top, and price can break this bigger daily wedge to the downside. So if I'm gonna look at this is a bigger flag, we can say that we got a strong sell-off over there, and price was correcting towards that flag and setting up for a sharp sell-off. So we are expecting it to give us a wave all the way back to that previous low 127 or further downside in longer run. So this is the wave which we are expecting over there, or at least fall from there and test that trend line and go for another leg higher and then again drop. All right, at least give us that kind of daily move, if not the move all the way back to that low. So but the bigger wave we are looking for this whole move to break down for longer term to the downside. Right, so this is the bigger picture. All right, but before going to look at the lower time frame, let's talk about that, why we are expecting it to drop from that top. So there we can see that the Ministry of Finance, Japan, Ministry of Finance is now happy with the weaker yen. So the higher the dollar goes against the yen, they are under pressure. So Ministry of Finance Suzuki said that closely watching FX moves with a great sense of urgency. All right, so that happened previously when dollar was just keep rising. So they were under pressure here at this place. They intervene, but price again did not drop, and then again they intervene aggressively over there, and then we have seen a big drop over there. But right now they are they are warning to the market that they may intervene again if this is not going to hold at current level or not going to turn down. If the trend keeps pushing more higher, they may intervene again. Last time they sold almost $60 billion, all right, to push this to the downside. So how big the next intervention is going to be, right? So we don't know, but the higher the dollar goes against the yen, they're going to be under pressure. So why rising dollar against the yen is creating problem for them? Okay, so for us, for that we need to look at the Japanese inflation. All right, so Japanese inflation is picking up. So Bank of Japan core CPI beat the forecast. All right, so the numbers were higher. So we can see that the inflation is holding higher. The core inflation is holding higher. So if dollar yen keeps pushing more higher, that means the core inflation and the headline numbers, they can stay at the current level or even can push higher. So if inflation numbers push higher on weaker yen, then there may be a problem for the Bank of Japan. Right now they're looking for the inflation to just stay where it is right now or push more higher. They want higher inflation, but if inflation if we see that the yen is going to get more weaker and we are going to see effect of that on inflation. Inflation is going to pick up, which is right now less likely, but in case if that happens, right, so that can put more pressure on the Bank of Japan to do something, all right, quickly, rather than saying that they're not going to do anything right now. They're going to hold the ultra loose monetary policy, so that can derail the markets, all right. So weaker yen may add more inflation simply, all right, and the interest rate is negative right now, so getting out from the negative territory and trying to bring down inflation. I mean, if inflation spike up from current level, that can cause the problem for the Bank of Japan, all right, and they don't want to do that. That's why they are just keep saying that they are watching it very, very closely, as they don't want inflation to push a lot more higher, all right, because that higher inflation can cause the problems. So they are saying that they want higher inflation, but technically they don't want, all right. That can because they are having highest debt to GDP, all right, then there's going to be a lot of problem for them. So that's why they're watching very, very closely, and they may intervene in the market. So news just broke out, Japan warns again on yen after dollar breaches 149. So 150 is a mark where you need to pay attention very, very closely. Okay, so what you are looking on the dollar yen, what you are looking, so they are watching is Ministry of Finance is watching closely dollar yen, and you are watching too closely. Okay, so what you are watching, you are simply watching a sharp aggressive sell-off over there, all right. Either this is being caused by the intervention or any other factor, all right. So let's copy that and change that color. Okay, this kind of aggressive sell-off you are looking. And if that's going to be really sharp, something like that, all right, great, that's going to be a perfect. And that too continue and keep falling lower all the way back to that low. So this kind of sell-off, so where you're paying attention, basically the way they are watching the okay, this is actually causing the rise to slow down. Hopefully you understand that why this is the dollar yen is rising, but rising in very, very slowly and turning into that wedge. All right, so the factors behind that, right? So, the factors, these are the factors behind that. They are warning, and that warning is causing the dollar yen to slow down for upside, right? So if I'm going to look at the lower time frame, and on lower time frame, you are looking simply for a quick aggressive sell-off, and once that comes, all right, so you are looking to get into the market, all right, or like this kind of aggressive drop you are looking for. Once you get that drop, all right, just get into the market and put your stop behind that. Right, once you see that appears, get into the market, put your stop behind that, and watch it closely. If it keeps falling, stay in. If it doesn't fall, all right, and push for another leg higher, just get out from the market, all right, and keep watching the price action from new highs, right? If sell-off comes again, get in, correction, look for it to continue. If it doesn't continue, another leg higher. Okay, as long as price stay within that wedge. Every time you see that the new higher high is just coming over there, you are looking for a quick aggressive sell-off over there, and once that comes, then you're looking to continue. If it continues to the downside, stay in. If it doesn't continue, stop. Let me show you example. Okay, there you can see that the strong sell-off came, but price did not continue, went higher. Okay, so no need to stay into the trade. Again, sell-off came over there. Okay, so sold somewhere there or where. Okay, but price is not pushing lower, no need to stay into the trade. Again, sell-off came over there. Okay, you sold, but price is not pushing lower. So went higher. So similarly, this is actually a counter trend trade right now. You are looking to get into the trade from the top, all right, as much high as possible, all right. So once you get that trade from the top and price start to fall aggressively, hold that trade for a longer term. As long as dollar yen keep falling, stay into that trade. If it doesn't continue, right, and push for another leg higher, yeah, so get out, let the price correct for another time. Or yeah, there are two types of behavior right now which is just happening over there. Okay, so price is not falling very aggressively, so falling correctively, pushing for another higher. Okay, so falling sharply, yeah, then again sharp, it's not falling very aggressive, not pushing lower aggressively, yeah, and going back up. No reason to stay into that trade, right? Again, falling slowly, pushing more higher, 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 right? As long as price keep falling slowly, okay, that means that the reversal is not there. Once prices, drop very aggressively, that means time to stay into the trade for more downside. Okay, that's what you are looking. Ministry of Finance is also watching it very closely. They may intervene if they, right now they are trying to reverse that trend with their comments, but they are not successful. And the other reason is that why dollar is just keep pushing more higher is the yields. Okay, so yields are still climbing. Yields are still pushing, higher, causing the dollar to stay stronger. But the thing is that the inflation has fallen below the yields, even from longer term, even longer term yields have fallen below the inflation. All right, the reason why yields are pushing more higher, because Fed said that they are looking to hold the rates higher for longer term. All right, higher for longer. So that's causing the yields to push more higher, even longer term yields. So you are looking for this to drop aggressively lower and continue to keep falling, yeah. And once price simply fall back within the moving averages, you are paying attention closely over there. Okay, the trend is still holding. We can see there, the trend is still holding. So you need to see that sharp breakdown below that trend and price to continue to keep pushing more lower. Right now, it looks like that we are going against the trend. All right, when you are looking to sell from these tops, you are going against the trend. But what you are trying to do actually, all right, so you are trying to catch the top for longer term. All right, and once you will be able to catch that top and price stop falling, all right, the return can be something like that, yeah. So in if you're gonna put stop loss something like 50 to 100 pip stop loss, all right, so then the trade can be really good all the way up to this low or further downside. So this is what you are actually trying to catch up, a big move to the downside. Yeah, if that's not going to happen, then at least fall within that trend line, something like that. All right, so it can give you a decent opportunity. So once once the Ministry of Finance intervene and confirm that it is going to drop, yeah, so then this is going to be a longer term trade to hold. Then this is going to be a longer term trade to hold. So right now looks like that it's a counter trend trade, but once price going to start falling, it can turn into a very decent move to catch. All right, thank you.